In the first quarter of 2024, startup investors globally were cautious, with overall investment levels being the second lowest since 2018. However, there were exceptions, with significant investment made in sectors like AI, healthcare, energy, and robotics. Asia's venture funding remained tipped overall, although Chinese startups saw an increase in investment. Latin America faced a decline in funding, except for Colombian startups, which saw a significant increase in investment. In Europe, startup funding remained steady, with sectors like financial services, healthcare, and energy leading in investment. The question stands: how far is this aimed at? Hi everybody. In April 2024, Indian startups experienced a positive trend in funding, raising $868 million across 90 deals, a 15% increase from the previous month's $754 million raised via 63 deals. However, this marked a 2% decline compared to the funding raised in April the previous year and a significant 66% decrease from the funding raised in April 2022, which was $1.52 billion. Despite the overall decline compared to previous years, seed and growth stage startups saw a year-on-year increase in funding in April. Seed stage startups raised $178 million across 46 deals, a substantial 286% increase from the funding raised a year ago. Certainly, the scenario above can be analyzed through the lens of several detailed economic trends and concepts, as in, number 1 is capital allocation efficiency. The fluctuations in funding amounts and deal count reflect shifts in the efficiency of capital allocation within the startup ecosystem. Changes in investor preference, market condition, and regulatory environments can impact how efficiently capital is allocated across different stages of startup development. Number 2 is financial market volatility. Variations in funding levels from month to month and year to year can be attributed in part to financial market volatility. Economic uncertainties, geopolitical events, and changes in monetary policies can lead to fluctuations in investor confidence and risk appetite, influencing the availability and cost of capital for startups. And number 3 is sectoral dynamics. The distribution of funding across sectors, example technology, healthcare, fintech, highlight the sectoral dynamics within the economy. Shift in consumer preferences, technological advancement, and regulatory changes can influence investment trends, with certain sectors attracting more capital than others based on growth prospect and perceived market opportunities. A question based on sectoral analysis would be: which sectors within the Indian startup ecosystem are attracting the most investment and why? In recent years, several sectors within the Indian startup ecosystem have attracted significant investment due to their growth potential, market demand, and disruptive innovation. Some of the sectors that have seen heightened growth in investor interest and substantial funding include: number 1 is technology and software. India's prowess in technology and software development has led to a surge in investment in startups focusing on SaaS, that is, software as a service, artificial intelligence, machine learning, and data analytics. The increasing digitalization of businesses and the adoption of cloud-based solutions have created a demand for innovative tech solutions, driving investment in startups offering software products and services to improve efficiency, productivity, and customer experiences. Number 2 is e-commerce and consumer internet. India's booming e-commerce market and the rise of digital consumer behavior have attracted investment in e-commerce platforms, online marketplaces, food delivery, and digital media. With a large population of tech-savvy millennials and increasing internet penetration, there is a growing demand for online shopping, entertainment, and convenience services, fueling investment in startups catering to these consumer needs. Number 3 is healthcare and medtech. The healthcare sector in India is witnessing significant investment in startups focusing on telemedicine, health tech, digital health records, and medical devices. The COVID-19 pandemic accelerated the adoption of telehealth solutions and highlighted the importance of digital healthcare infrastructure. Additionally, India's large and unserved population present opportunities for startups to address healthcare access and affordability changes. Number 4 is FinTech. FinTech startups offering digital payments, peer-to-peer lending, personal finance management, and insurance technology have attracted substantial investment in India. Government initiatives promoting digital payments, regulatory reforms, and the rise of mobile banking have created a conducive environment for FinTech innovation. Additionally, the large unbanked and underbanked population in India present a significant market opportunity for FinTech startups. Number 5 is renewable energy and clean tech. With a focus on sustainability and environmental conservation, startups in the renewable energy and clean tech sectors have garnered investment interest in India. India's commitment to renewable energy targets, favorable government policies, and the need to address environmental changes such as air pollution and climate change drive investment in startups developing clean energy solutions, including solar, wind, and electric vehicles. And number 6 is edtech. The education technology sector in India has experienced rapid growth, with startups offering online learning platforms, tutoring services, and skill development programs attracting significant investment. The shift towards remote learning, digital upskilling, and the increasing demand for affordable and accessible education options have fueled investment in edtech startups. Additionally, initiatives such as National Education Policy 2020 emphasize the integration of technology in education, driving innovation in the sector. In conclusion, the detailed sectoral analysis of the Indian startup ecosystem reveals key areas of investor interest and significant funding inflows. Practical reasoning behind these investment trends include factors such as digitalization, consumer behavior shift, regulatory reforms, sustainable goals, and technological advancement. Observing fluctuations in funding levels and investor sentiment highlights the inherent risk associated with startup investment. Learners can explore strategies for assessing and mitigating investment risk, including diversification, due diligence, and portfolio management techniques.
Hope you liked the video. Let's unlock together your full potential and achieve remarkable success in the world of business. If you are new to the channel, do like, share, and subscribe for more such content related to business and finance. Till then, goodbye everyone.